All right, let's talk about the elephant in the room, the question that's got Wall Street and Silicon Valley completely divided. We're talking about a topic that's generating as much heat as the GPUs powering this whole thing.
So are we in an AI bubble? It sounds like a simple yes or no, right? But oh man, it is so much more complicated than that. Are we on the verge of the next massive leap forward for humanity? Or are we just watching a classic speculative bubble get bigger and bigger, just waiting to pop?
Okay, so today we are going to dive deep into all the arguments that scream, yes, we absolutely are in a bubble. And just so you know, this is part one of a two-parter. We're going to play devil's advocate here. In part two, we'll flip the script and look at the other side. That way you get the whole picture.
Okay, here's how we're going to break this down. First, those sky-high valuations. Then, the crazy fast climb we've been seeing. Third, let's call it excess of promises. Fourth, the massive unchecked investment pouring in. Fifth, the big problem with high costs and shaky profits. And finally, the fragile economic world we're in right now.
All right, first up, the numbers. The numbers don't lie. We're talking about sky-high valuations. Honestly, if you look at how some of these AI companies are being valued, it feels like we've jumped in a time machine right back to 1999 and the dot-com bubble.
Get this, the price-to-earnings ratio for a lot of these companies, it's over 100. Let that sink in. That means investors are paying more than $100 for every $1 of actual profit the company makes. That's wild. And if you think that's nuts, check out the price-to-sales ratio. We're seeing that climb above 40. Now remember, that's not 40 times profit. That's 40 times revenue, the total money coming in the door before any expenses. I mean, these are just astronomical numbers.
But here's where it gets really clear. Look at this comparison. A typical AI stock's PE ratio is way up there at 100. The average for the S&P 500, the 500 biggest companies, is around 25. You don't need to be a math genius to see that huge gap. It just shows how disconnected from the rest of the market this whole thing has become.
It all comes down to this idea. These valuations are only sustained when narrative overcomes real results. And that's exactly what we're seeing. The story of AI, the promise of what it could be, is way, way more powerful right now than the actual money these companies are making. Okay, so we've got the crazy high valuations, but argument number two is just as important. It's not just about how high these prices have gone, it's about how fast they got there. This kind of parabolic rise, it's a huge, flashing red light. I mean, we're talking about some stocks shooting up 300% in just 12 to 18 months. That's not steady growth. That's a rocket ship. And historically, rocket ships like this don't stay in orbit forever. They tend to come back down, and fast.
And you know what? This follows the classic bubble playbook step by step. First, you get a cool new technology. Then a huge disruptive story builds around it. That kicks off a wave of mass buying, driven by pure FOMO, fear of missing out. And boom, before you know it, the prices have completely left the planet of operational reality.
Which brings us perfectly to our third point, the hype machine. Think about it. Every bubble in history needs fuel to keep going. And that fuel is almost always a non-stop fire hose of hype and promises. And AI, it's got that in spades.
Right now, it feels like every company on Earth is slapping the letters A and I onto everything they do. Why? Because it's a magic word to attract capital. It doesn't even matter if AI is a tiny part of their business, or even part of it at all.
And look, this is not a new trick. We've seen this movie before, right? Back in the 90s, it was biotech. Then in 99, every company was an internet company. A few years ago, it was blockchain. And today, the magic word is artificial intelligence. It's the same pattern. The story becomes more important than the sales.
So all that hype leads directly to point number 4, a massive unbraked spending spree. We're watching the biggest tech companies in the world pour literally billions upon billions of dollars into an AI arms race.
So where is all this money going? Well, you've got these multi-billion-dollar data centers popping up everywhere. There's a mad dash to buy every expensive GPU and chip they can get their hands on. They're hiring specialists for crazy salaries, and don't forget the colossal energy grid needed to power this whole thing. The scale is just mind-boggling.
And here's the real risk. This creates a danger of what's called excess capacity. Basically, everyone is building stuff because their competitors are building stuff, not because customers are lining up to buy it all just yet. It's the exact same mistake we saw in the dot-com bubble, with all that dark fiber optic cable that sat unused for years.
Okay, on to point number 5, and this one is huge. Let's call it the profit problem. It all boils down to some simple but pretty scary math. There's a massive gap between what it costs to do AI and the actual profits coming out the other end.
Just look at the balance sheet here. On the cost side, it's absolutely brutal. We're talking millions of dollars just to train a model, and then millions more just to keep it running day to day. Now look at the profit side. The margins are way tighter than people thought, and the profits themselves, well, they're not even close to matching those immense costs. Something's got to give, right?
And that brings us to our sixth and final argument. We have to zoom out for a second and look at the bigger picture, the fragile economic context. This whole AI boom isn't happening in some perfect, stable world. It's built on some pretty shaky foundations. Think about it. We're not in the 2020 or 2021 world of 0% interest rates and free money anymore. Today, interest rates are still high. That means the cost of borrowing money is way up. There just isn't that same fire hose of cash sloshing around the system.
So what does that mean? It means there's less of a safety net. Bubbles can burst a whole lot faster when money is tight. If those big AI profits don't show up and show up soon, the correction could be incredibly quick and painful. So when you put it all together, the insane valuations, the frantic, dangerous climb, the hype machine working overtime, and this really fragile economic backdrop, it makes you wonder, is this a genuine revolution? Or are we just watching a repeat of history, the same old bubble story with a much, much smarter main character?
All right, so in our last explainer, we really dug into the arguments for why AI might just be a massive bubble. We talked about those crazy high valuations, the investor frenzy. It all felt a little familiar, right? Like maybe we've seen this movie before.
Okay, but now let's flip the coin. What if it's not a bubble? There's a really compelling argument that this is something else entirely, something way, way bigger.
In fact, a lot of very smart people, serious analysts, are saying this is the start of a whole new technological era. Think about the invention of electricity or the internet. They believe it's that big. So, let's get into it. Let's look at the arguments for why AI is absolutely the real deal.
So the number one argument against this being a bubble, it's pretty simple. Unlike so many of those past market manias that were built on nothing but hopes and dreams, AI is already delivering real, tangible value today.
So is it all just hype? Well, think about it. Those other speculative tech bubbles, they were all about promises, right? In the future, we'll do this. But AI, it's already here. It's deeply woven into the real economy right now.
And just look at how practical this stuff is. I mean, this isn't science fiction anymore. We're talking about real companies saving millions of dollars on fuel just by optimizing their shipping routes. Or think about AI chatbots handling customer service 24/7. In medicine, it's discovering potential new drugs at a speed that was unimaginable just a few years ago. And the key thing is, this is all happening right now.
And that really gets to the core of it, doesn't it? This isn't just some buzzy concept. It's measurable efficiency. It's real money, real cost savings that you can see plain as day on a company's balance sheet. And because that value is so obvious, so real, it leads us right to our second point, massive and immediate adoption. This isn't some technology that we're told is coming soon. No, it's happening at a huge scale right this very second.
And just look at how widespread it is. We're not talking about some tiny niche tech corner. You and I, consumers, are using it on our phones every single day. Big corporations are plugging it into their most important processes. Governments are using it for everything from planning cities to national defense. It's in our hospitals, it's in our schools. I mean, it is literally happening everywhere all at once. And it all comes down to the speed. I mean, we all thought smartphones and social media took off like a rocket, right? Well, generative AI has just completely shattered those records. We have never, ever seen a technology get adopted this quickly.
Okay, so this incredibly fast, widespread adoption leads us straight to argument number 3, the very real potential for a massive economic boom, all driven by a revolution in productivity.
Now, I know a number like 1 or 2%, it might not sound like a big deal, but you have to understand on a global scale, a sustained 1 to 2% boost in productivity every year is absolutely astronomical. We are talking about trillions, with a T, trillions of dollars in new economic value being created. That potential alone could be enough to justify these massive valuations for the companies at the forefront of this.
And it's so important to get this. AI isn't just about automating jobs away. It's a force multiplier for what we can do. It makes research go faster, it helps us make better decisions with better data, and it basically multiplies what a single person can accomplish.
Okay, but what about all the money being thrown around? The billions and billions pouring into chips and data centers. That has to be a bubble, right? Well, the fourth argument reframes this completely. It's not a symptom of a bubble, it's the necessary foundation being built for a whole new era.
Just think about the historical parallels for a second. Before we could all flip a light switch, we had to build a massive grid of power plants. Before we could all log on to the internet, we had to lay millions of miles of fiber optic cable. Well, today's AI revolution needs its own infrastructure. We're talking about vast data centers and highly specialized chip factories.
So what does that really mean? It means this isn't some short-term spending frenzy. This is a massive, structural megatrend. We are at the very beginning of what's probably a 10, maybe even 20-year cycle of building out the fundamental plumbing for the entire AI economy.
And all this new infrastructure brings us to point number 5, the unique economics of how AI actually works. And this helps explain why just a handful of companies are getting so incredibly valuable so fast. See, at the very heart of it, there's this powerful feedback loop. The more data an AI model gets to chew on, and the more people like you and me use it, the smarter it becomes. It's this incredible, self-reinforcing cycle of getting better and better.
And that little feedback loop, it has huge economic consequences. It creates these giant walls, these barriers to entry for any new competitors who don't have that mountain of data. It basically leads to natural monopolies, where a few top models just become totally dominant. And it creates these incredible advantages of scale, where the biggest players just keep getting better faster than anyone else.
So what's the end result? Well, the companies that win this race could end up with these dominant, fortress-like positions in the market, allowing them to pull in extraordinary profit margins for decades. When you look at it through that lens, all of a sudden today's crazy high valuations, well, they start to make a lot more sense, don't they?
All right, and for our last argument, let's pull it all back from future potential to the hard, cold numbers of right now. Because the financial benefits, they aren't some far-off promise. They are happening as we speak.
The proof is right there in the financial statements. I mean, the chip companies that are powering all this, they're smashing earnings records. The demand for cloud computing power to actually train and run these AIs is way bigger than the supply. And get this, businesses are so sure this is the future that they're locking in multi-year, multi-billion-dollar deals. This isn't a one-off thing. AI software is already creating steady, recurring revenue.
So, when you put all the pieces together, you've got real income, you've got demand that's through the roof, and you've got massive profits already being made. What you're looking at are the foundations of a very real, very sustainable economic shift. This is not just speculation.
All right, this is it. This is the big one. After digging into the hype, the hardware, and all the arguments, we are finally here to answer that one massive question. Is this whole AI boom a genuine revolution, or are we just watching another tech bubble get ready to burst? So in our last couple of breakdowns, we've really looked at this from every angle. We've seen the sky-high valuations and the non-stop media frenzy. But we've also seen the incredible technological leaps that are happening, almost every single day. We've heard both sides of the story. And now, it is time to put all those pieces together. It's time for the final verdict. So, after all that, where do we actually land in this huge debate?
Okay, let's dive in one last time. What we're doing here is unpacking the central conflict that has pretty much taken over the tech and financial worlds for the past couple of years.
The arguments on both sides are really strong. In one corner, you've got all the classic signs of a bubble, right? The crazy valuations, investors throwing money at everything, and just relentless, inescapable hype. But in the other corner, something feels different this time. We're seeing a technology with a real, tangible impact that's being adopted across the globe at a truly breathtaking speed. So, after laying it all out, after weighing both sides of the scale, here is the conclusion. It's a nuanced take, for sure, but it definitely leans in one clear direction. And here it is. The big takeaway is this: we are not in a classic bubble. Now, I know some of the market behavior feels a lot like bubbles of the past, but the core fundamentals, well, they're telling a completely different story.
So you're probably asking, how can that be? With valuations this insane? And the answer is actually pretty simple, but it's also profound. The potential scale of this AI opportunity is just so enormous, so massive, that it might actually justify and maybe even blow past the crazy levels of excitement and investment we're seeing right now.
And to really get why, we need to think about this in terms of technological disruption. This isn't just about a cool new product or a slightly faster app. We're talking about a foundational shift. It's a force that doesn't just create a new industry, it fundamentally rewires how all the existing industries operate.
And that right there brings us to the very heart of the verdict. AI isn't just another tech trend. It could very well be the single biggest technological disruption since the dawn of the internet. And honestly, it might end up being even bigger.
Yeah, because we're not just talking about smarter chatbots or better photo filters here. We are talking about a fundamental reshaping of our entire world.
I mean, the sheer scope of the potential impact is just staggering. AI could totally transform the global economy, it could redefine what work even means for billions of people, unlock productivity gains we've never seen before, and just completely tear up and rewrite the business models in every single sector you can think of.
Just think about the scale for a second. We all lived through the internet revolution. We know how huge that was, how it changed literally everything. Well, the argument here is that AI's power to disrupt could be even greater. The very foundation of our society could be on the verge of a massive change.
But, and this is a big but, anytime we talk about the future, we have to add a healthy dose of caution. Because when it comes to markets and technology, the only thing that gives us the real answer is time. So, looking ahead, it really feels like there are two main paths this whole thing could take. Paths number one, we're witnessing a true revolution that's really only in its first inning, with most of the growth still way out in front of us. And then there's path number two, a major market correction is coming, a painful, maybe even necessary drop before the next big climb.
And that's really the question, isn't it? Are we standing at the very beginning of a transformation that will play out for decades? Is all this excitement just a tiny little preview of what's still to come?
Or is a sharp, painful correction just an unavoidable part of the process? You know, a necessary reset that washes out all the froth and hype so that the real, sustainable growth can take root. The path forward is probably not going to be a straight line.
But for right now, today, this is what all the evidence is telling us. After we sift through all the data, all the hype, all the arguments, one thing is crystal clear. The potential here is absolutely enormous.
And maybe, just maybe, that's the most exciting part of all of this. This isn't the end of the story. It might not even be the end of the first chapter. We're all here, watching it unfold as this next chapter of our technological history is just now being written.
But hey, that's our take on it. Now we really want to hear from you. Do you think we're at the dawn of a new age, or is a massive correction just around the corner? Let us know what you think down in the comments. And if you want to dive deeper, check out our other analyses right over here. And of course, if you found this breakdown valuable, hitting that like button and subscribing really does help us out a ton. Thanks for watching.